How's it going, everyone? So in this video we're going to be focusing solely on dividends. Now, for those who have been following my channel, we've spoken about dividends all the time, and we're aware that when we buy a share, certain shares pay out dividends. And in my case, I use the Trading 212 platform. I focus primarily on dividend-based stocks that pay out dividends every 3 months. Now, I admit there's not many stocks that I have currently that are paying a large number of dividends. It's extremely low right now, and that's just because it's a function of how much our account has been funded. We're yet to reach the £1,000 of the account value. Now, we are very close to reaching £1,000, and in the future there will be changes to my investment strategy in the new year. So quickly get it out of the way, those who want to use the Trading 212 platform, there is a link in the description. Feel free to use that link and you will receive a free stock up to £100. It's generally in the £10 mark, but it's a free stock. Who doesn't like free things? And all you need to do is deposit £30 at the minimum and you will receive that free stock in a couple of days. So let's try to understand when we should actually be buying dividend-based stocks. It's simply not the case that when you buy a dividend stock that you will straight away earn the dividends within that 3-month period. That's not how it works. So what I want to talk about is 3 main words used when talking about dividends. And so the first one is what's called the declaration date. And so the declaration date means that the board of directors will announce when the next lot of dividends will be paid out. So it's just an announcement to the shareholders for when the next payout will take place. Now, when that announcement is made, they commonly refer to 2 other terms. And so let's look at the next term, which is the ex-dividend date. So when an ex-dividend date is announced, let's just say it's the 1st of January. And so if that date is announced, anyone who buys the dividend-based stock before the 1st of January, so let's say they buy a stock on the 31st of December, then they are eligible to receive dividends. So in the event that you buy a stock on the ex-dividend date, so in our example on the 1st of January or afterwards, you will not receive that dividend payout during that announcement period. So what generally happens is on the ex-dividend date, the stock price actually lowers. It always happens, and it drops by the amount that the dividend payout has been. And so for those who are new to the game and they want to buy more of the stock, there is a buying opportunity on the day of the ex-dividend date and the subsequent days after that. And that's simply because individuals that hold the stock generally sell after the ex-dividend date. So while you can get the stock at a lower price, sometimes it makes more sense to have brought the stock earlier to receive the dividend payout. Now that just depends on how much the given stock is going to drop after the ex-dividend date, and if you buy before, it depends how much of the stock you purchase to then receive in the dividend payouts. So the last term that I want to focus on is what's called the payment date. And so up until now, the shareholders don't actually receive the dividends. The price is declared, but shareholders don't actually receive the dividends in their account until the announcement date. So generally, it can be a couple of weeks or up to a month from the ex-dividend date to the actual payment date. So those are the 3 terms I wanted to focus on. The main one is just to understand the ex-dividend date and to understand that if you buy before that date, then you'll receive the dividends. And if you buy after, then you have to wait for the next cycle to take place. So with that said, I want to talk about my favorite dividend-based income, which actually pays on a monthly basis. and that is the Realty Income stock. Now, in previous videos, I spoke about my interest in the given stock, and you can see I have it on my screen. Now, the reason why I didn't purchase in the past was because the stock was just too high. Even now, for instance, one could argue the stock is still pretty high. But for me, I felt really comfortable buying around the $75 mark. You can see on my pending orders tab that I plan on buying a couple more at a price that hasn't quite been executed yet, $75.25, and we're slightly over that currently. So Realty Income is a REIT, an REIT. Now, REITs have a really high payout ratio, which is great because instead of paying taxes on all the gains, they will just give all that money to their shareholders, generally in the 90% range. And on top of that, some REITs, such as Realty Income, pay every month. So it's a really nice feeling to receive dividends month by month. And of course, the more underlying stock that you purchase, the more gains you see month over month. So unfortunately, on the Trading 212 platform, there isn't much exposure to dividends that pay monthly. Now, for those that are citizens in the US, they have access to different brokerage firms, different platforms, and they have a lot more access to buy monthly based dividend stocks. Now, in saying that, on Trading 212, as opposed to the likes of Free Trade, we do have access to Realty Income. That could change in the future. Equally, Free Trade has access to a different type of dividend stock that pays monthly as well. But for me, I really like Realty Income, and I currently own a couple of shares, and whenever there's buying opportunities, I will be buying more. So we can see on my account, we have some other alerts set already, and we shall see if the price ever drops. And they are just great buying opportunities in general. Now, Realty Income, their dividend yield is currently almost at 3.6%. Now, that's not the highest it's ever been. And so 3.6% is split over the 12 months. Now, depending on the amount of dividends that a company will be paying out, in a year you receive the 3.6%. So that price is spread out every month. So should you take those profits, reinvest those into the platform, when you combine all the other dividends within your portfolio, you can buy another share in a given company. And that is the effect of compounding, which allows your account over time to grow exponentially without having to do much work. So to talk more about why I believe in dividend-based investment, the only other type of business model that you can compare this approach to is the likes of the housing market. So when you buy a home, you have your principal cost, which is the brick and mortar cost. So let's say you buy a home at £200,000. Now what you can do is you can improve the bathroom, you can change the windows, and you can make the home much better. Now, such decisions can appreciate the actual price of the home should you sell at a later date. Now, comparing that analogy with the stock market, when you put, say, £100 in a given stock, you are buying the underlying asset. And instead of being able to directly make changes to the company, you have to rely on the actual employees to improve the company. So you're unable to make direct adjustments as opposed to if you owned a home, changing the windows, etc., to increase the initial value of the home. So in the event that you are a landlord, which just means that you allow someone else to occupy the home, and that is defined as tenants. And so in the form of rent, you'll be receiving monthly payments, and that is very similar to the likes of, say, Realty Income, which is a stock that pays dividends every month. Now, even stocks that pay every 3 months, it's no different from imagining you have a tenant and for whatever reason, you collect money every 3 months. And so for those who are unable to pay a large amount for a home, let's say in the 20% initially, having a platform that focuses on dividend-based investments is very similar to that of the housing market. And so one could argue that because you're not having to deal with tenants, you're not having to deal with fixing the apartment, that there's some benefits when focusing on dividend-based stocks. Now, at the same time, a given stock may not appreciate to the levels that a home can reach, and that is a valid point. It's not a case that one is better than the other, but it's just a way for people to think about where they can best place their money. But having a dividend-based portfolio is a way to grow your money, and it allows more investors to potentially invest compared to those that maybe can't afford the deposit value to buy a home. So for me, that is why I focus on dividend-based investment, and I will continue to do so in the future. So I want to thank everyone so far for supporting me. Hopefully you enjoy this type of content. I'll be producing more in the future. So with that said, I'll see you in the next one.